So welcome to this short video where I'm going to be providing a succinct overview of the key drivers and outlook for the zinc market, really drawing on the insights of analysts and industry experts as expressed during virtual LME week events that took place over the last week or so. So looking at the overview first, the zinc market price recovery has been pretty strong this year, tracking the rest of the base metals really, and the driver of that's really, as it has been for most of the base metals, been a very strong rebound in Chinese demand in construction, for example. And that's been combined by mine supply disruption in zinc particularly. Financial participants are pretty long of zinc. They're anticipating further supply disruption, and they think that the deficit that we've seen in the concentrate market maybe will feed through into a restrained refined zinc supply growth over the next year, and that's been reflected in low treatment charges. In terms of supply, digging into that in a bit more depth, zinc mine supply has been hit pretty hard this year. Estimates varying maybe between 4 and 7% of mine supply, which is the most impacted of any of the base metals really. I think that a key difference is that refined zinc production, according to ILZSG estimates, risen by about 1% this year. So there's been a bit of a differential there between refined and mine supply, and that's been reflected in the weak treatment charges that we've seen. I think going into Q4, there's some question mark about whether a winter seasonal slowdown in zinc mine production in China is going to impact refined output over that period. But I think that 2021 mine production is expected to rebound pretty strongly globally, maybe about 6.6%. But that really assumes that there's not any significant disruption to that supply. And I think that considering that 75% of mine supply from zinc, roughly that amount, is from underground operations, where it's harder to maintain COVID-secure working conditions, there's heightened potential going into next year for further disruption because of the extended impact of the pandemic. So that's really where the bull kind of risk is there for zinc. If we look at demand, we've seen it was very much hit hard initially by a slowdown in the global automotive sector, but the rebound in construction, particularly in China, has been really a key driver, as I've mentioned. The Chinese rebound helped the recovery really from Q3. I think if you're looking in terms of what's going to happen this year and next year, demand was forecast by the ILZSG to fall about 5.3% in 2020, and next year looking at a growth of about 4.2%, so a fairly significant rebound. However, we look at the market balance now, we'll see that most analysts, all four analysts that were providing estimates last week, have anticipated a surplus in the refined zinc market next year. The size of that surplus really as a variable based on the individual outlook for the macro situation next year and the uncertainties around the pandemic and the fiscal response of global governments. I think one of the risks is obviously the Chinese policy, whether they're going to pull back on stimulus for areas like construction into the second half of next year. So you've got these various forecasts of between 50 and 460 kilotons. But again, supply bull story really focused around mine supply and the potential for further mine supply disruption. So that's the outlook for zinc. If you'd like more LME week insights, I encourage you to view some of the other LME week review videos that we've distributed, which include a base metal market overview and drill downs into some of the other LME individual metals as well.